Hey, hey, hey. We are back and we are doing another episode of Coffee and Accounting. I do not know if my microphone is plugged in or not, and it is not. So, let's solve that issue. That's why we do sound checks and tests. Anyways, voice recorder. Oops. There we go. Alright. Can you hear me? Can you hear me now? Alright, we are going to mute PC noise if we can. Microphone, test and troubleshoot. Hello. Hello, hello. You can't see it, but there it is. Ha ha ha. Alright. Let's see. We are still recording. Alright. We are back to Coffee and Accounting. I love it, y'all. Alright, I need to open my mixer. Let's see, system sounds. We will turn down. Turn down for what? For system sounds. That's what we will turn down for. That's right. Alright, so, my beautiful little coffee mug. Celebrate the small victories. And I have that because I am horribly bad at celebrating victory overall. So, welcome to Coffee and Accounting. We are back, and hopefully better than ever. There's a couple things that I wanted to change up from the format that we tried last time that really just didn't work out at all. Frankly, it was boring. I was too soft-spoken. And you know what? I made it feel like it was, sex on the radio. What can I say? This dashing voice, this beautiful face that you can't see unless you're watching the video. And we just basically just did commercial spots for people. So it was not, it wasn't good. It just wasn't good. So we're gonna change that. And we're going to make it entertaining. We're going to make it fun. I'm going to have fun with it because I really enjoy editing these episodes. And I really enjoy, apparently, the sound of my own voice. So that's what we're going to indulge. So I will be leaning on you guys for help directing the show and help picking out topics as we move forward. And occasionally, I would like to also have guest speakers on, maybe in person or maybe via phone in, since our network is growing crazy all over the country and all over the world right now. Shout out to Emilio Roman and Hector Rodriguez and Robert J. Moore. Three phenomenal men that have really had a impact on me as far as debuting my skills and things when it comes to public speaking, authorship, producing content. However, Gary Vee has been the biggest proponent in my life when it comes to just getting crap out there. Because I'm horrible at it, to be honest. I really suck at making content because my life isn't on screen, even though that's my job. My life is not in my phone, even though I talk to my clients remotely. My life is in person. My life is my kids. My life is my wife. My life is, growing my business. My life is phone calls that just never fucking stop. I can't even pretend like I'm mad about that. That was a telemarketer. So, That's frustrating, but it's life, you know. So there we go. I'm going to kick this off. One of the main things that I want to get into that I get questions about all the time, especially as a tax and accounting professional, is how should I set up my business? I want to start a business, but how do I keep it legal? Well, the good news is you don't actually have to do anything. As a sole proprietor, you can use your social security number, and that's good enough. The reason that people incorporate is to give themselves some extra protection, depending on the line of work that they're in. If they're in something and they personally have a lot of assets before coming into the company, what is this? What, is it a hat? No, random shit my kids put on my desk. Curtain rods. Curtains! It's curtains for you! For all of you! You can't see it, but I just found a curtain rod that apparently my cleaning lady stuck in the back of my office. And if you're watching this, you know who you are. I'm not going to name names. But you do a good job, and I appreciate you tremendously. So anyways, you don't actually have to start a business. You don't actually have to form an LLC or an S Corp or a C Corp or a partnership or any such shenanigans. That's the beauty of America, is that you can actually go out there, you can do something, you can make money, and as long as you're honest about it and you report it to the IRS that you've made the money and they can tax you on it, then you can keep doing it. The age-old myth is that you have to do something that's structured, that's in the norm, that's been tried and true in order to be successful, but you don't. The beauty, and one of the things that I love about entrepreneurship, is that it feeds the imagination. If you can dream it, you can do it. I'm sure I've seen that on a poster somewhere. Anyways, however, once you start amassing a certain amount of income, that's when you might want to think about potentially forming a corporation, because you want to protect yourself, you want to protect your personal assets, you want to protect your home, your family, and most of all, any money that you're able to take out of the business to save for a rainy day, like, retirement or something. Funny story about retirement. It's a buzzword right now, right? Everyone's thinking about, oh, I gotta put money away, pensions don't exist anymore, oh God, what am I gonna do when I get old? You're gonna do the same damn thing everyone else has done for generations. You're gonna work until you can't work anymore, so you better work at something you enjoy. Passive income doesn't really exist. You've got to work for everything in life. Sorry to burst your bubble. So, on that note, retirement is, as many of you know, I'm a Christian man, so I follow the teachings and preachings of our Lord and Savior, Jesus Christ. But what you may not know is that retirement is not mentioned anywhere in the Bible. It is a 21st century Western idea. It is. Now it's a worldwide idea, because it's not a bad idea. Retirement is great. However, let's face it, most of us have trouble meeting our monthly requirements from our job. So how can we be expected to save for retirement? A lot of people are banking on their home being their savings for retirement, and some kind of meager 401k. I know some people that I may or may not be related to that have a very minuscule retirement to speak of, and they are close to the age of taking Social Security, if not already there, and about to do so, and not able to necessarily pay off the house. And if they sell the house, right now would be a good time to sell the house, I think. What are they going to do with that money? What can you do with that money when you have a huge windfall of over $100,000 or something to that effect? What can you do with it? You know, are you able to do anything that can set yourself up for retirement? But anyways, I digress. That's not what this episode is about. I promise you that I will do one on retirement at some point down the road. However, let's get back on topic. Structuring and starting your business. Let me give you the most sound, solid, practical advice that anyone will ever give you. And that is not get an accountant or get a lawyer or get QuickBooks or, make sure you filed all your taxes or what have you. That is simply whatever your business is, go out and do it. Get out there. Make a sale. If you don't know what you want to do, but you know you want to be in business because entrepreneurship is sexy and attractive right now, then put up and shut up, buddy. Get out there, sell something. You can play the flip game like Gary Vee, or you can buy and sell used cars. You can cut lawns. That's where I started. You can, do people's laundry. You can clean people's houses. You can even create a website to drive traffic to other people's businesses and then sell them those leads. That's a thing. A lot of people making a lot of money at that right now, actually. Anyways, the main thing is they're doing something. So if you want to be an entrepreneur, if you want to prove yourself in entrepreneurship, no one gives a shit about your age. No one gives a shit about your experience. No one gives a crap about anything. If you can sell or if you can solve a problem, you win. Hands down. You can do something. You can be an entrepreneur. However, 90% of people out there don't have the chops to be an entrepreneur. It's hard. It's lonely. It's terrifying. Absolutely terrifying. And, yeah. It's scary. It's scary out there, man. Because the market doesn't give shit. Doesn't give one freaking iota about your feelings. Doesn't care whether you feel taken care of, whether you feel taken advantage of, or whether you don't. The market is blind to feeling. You can be a compassionate entrepreneur. And in fact, you should be. You should be. You hear Gary Vaynerchuk talk about all the time empathy, kindness. Kindness is the new currency, or happiness is the ROI, right? Well, let's face it. If a lot more people weren't so miserable, then a lot more people wouldn't be such dicks. At least that's what I think. And opinions are like buttholes. Everybody has them and they all stink. I probably should have said armpits, not buttholes, but you know what? Screw it. This is my podcast. I can say what I want. So anyways, that's kind of where I'm at. If you want to be in business, go out and do it. If you get an accountant and if you start making some money, you're going to need an accountant. At least someone to help you file your taxes and keep track of your shit so the IRS doesn't come take it all away from you. Again, another reason why people get LLCs and S Corps and C Corps. I would say if you're just starting out, like you're a kid in high school or you're a kid in college or you're some person on TikTok. If you're a 15-year-old on TikTok, let's put it out there. Because I heard someone on TikTok mention, oh, I'm gonna start making merch. Like, what? Huh? Merch for what? You do videos on a platform. What are you going to sell? What is your merch going to be? Are you going to make onesies? I may buy that. You going to make t-shirts with your face on them and sayings? Someone may buy that. Not I. I won't buy that. Nope. But some people will. Hey, man, we all have fans. We all have things we like. I'm not trying to, hustle shame. gotta celebrate the small victories. But anyways, yeah. So get out there and do something first before you start worrying about how you're going to structure your business, because that is the least of your worries. If you're a real estate professional and you don't have or you want to be a real estate professional and you don't even have your real estate license yet, come on, Jimmy. Go out, get your shit, and go sell a house, and then worry about, oh, how am I going to shelter some of this money for taxes? Or how am I going to have to pay less taxes? And, oh, how am I going to do that? Make money first. That's how you're going to do that. You know, if you focus on generating the income and then finding the professionals around you to sort out the rest of the crap, that's how you end up being successful. You only have so much time in a day. And if you divert your time from the things that you're good at to focus on the things you need to do that you may not be so good at, you're going to suffer. You're going to suffer. Personally, I am the tax wizard. I am phenomenal at taxes. However, to sustain my business outside of tax season, I needed to add payroll and bookkeeping. Great at payroll, great at bookkeeping, but I don't have time to do all of them and keep expanding my business. So I have to hire people, train them to do the work that I need to do or that I have been doing, and then go out and find more work so I can continue the process. That's how business expands, at least traditionally. Network marketing is a little bit different. Network marketing, and tax-wise, I help out a lot of network marketers. It's kind of a passion of mine, since me and my wife also have a love for network marketing. Network marketing is literally, you just have to know, you don't even really have to know how to sell. You just got to have to know how to be a product of your products or a product of your services, you know, and be able to communicate why someone needs them and what need that your product or service solves. If you can figure that out, that's the whole point of sales. That's it. That's everything. And then you can grow your business, even in network marketing, you know, because if you can do it, you can teach someone else how to do it. And that's the main thing that people forget, is that as an entrepreneur, you don't only have to be good at sales, you also have to be good at teaching. Otherwise, you're just going to end up as an employee in a sales organization. Or at least you should, because if you can't teach someone and duplicate yourself, then you're never going to get anywhere in business. You have to build a network and an infrastructure so that you can replace yourself. And I'm not going to lie, entrepreneurs are very capacitous human beings. And if you have doubts about your capacity, stop, because you're an amazing human being. You just need to have some faith in yourself and maybe some permission to go out there and be a fucking rock star. So go do it. But anyways, I digress again. So once you start making some money, some sales, if it be in network marketing or a traditional business or a mom and pop shop or an online retailer or e-commerce or what have you, or if you're just doing lead generation, or if you're doing marketing, a digital services company, whatever it is, whatever your shtick is, whatever your business is, whatever you're passionate about, or whatever you see an opportunity in, go after it, man. Run after it. Do it. Make some money at it first, and then worry about the shit. Alright? After you start making about $5,000, $10,000, $15,000 in a year with your business, that's when you need to start worrying about, okay, so I'm just doing it as me, a sole proprietor, using my social security number. Should I get an LLC now? That's the progression, alright? If you're starting from zero and you've got no money in the bank, you've not made a single sale, you do not need an LLC. Alright? Done. Let's stop the bullshit. That's just people trying to make money. And the reason that makes money is because 95% of businesses fail. So you can have a business registering companies, and that is one of the services that we offer, And that business may be in business this year, out of business next year. They may last 3 years. Who knows? Regardless, it's a one and done service. That's it. However, once you get up to about $15,000 in annual revenue, that's when it's time to get an LLC. Start protecting what you're doing and what you've got at home. Form an LLC. You can do it for free through the IRS, and then there are state fees associated with it. It's a lot of paperwork. It's a little confusing. I've done it for a lot of years. I did it for myself multiple times before I ever tried to do it on behalf of someone else and offer it as a service. So I also recommend speaking to a lawyer, getting an operating agreement in place. And oftentimes, once you get to that point, if you talk to a lawyer about getting an operating agreement, the lawyer will also probably try to offer to file the stuff for you as well with the IRS and with the state. State fees, depending on your state, are between $50 and $250, I think, is the top. It may be $350 now, depending on where you're at. A little bit of an itch. Anyways, but there you go. You can have somebody take care of that for you, or you can take care of it yourself if you are bold, brazen, and adventurous, and just have a blatant disregard for whether you screw up or not. Or you can pay someone, a professional like myself, or a lawyer to do the work for you. That's how life works. Then, once you got that LLC, and you're working your business, you're growing, you're flourishing, and you double or triple your money. So we're talking $45,000, $50,000, $30,000 at minimum. Then you may want to think about converting to an S Corp. Generally, I don't advise people to, if they've got a business, I don't advise them to form an S Corp if they're making under $50,000 a year. Now, the reason for that is some people will advise you, oh, when you get to $25,000, S Corp, S Corp, S Corp, whatever. $25,000 in business is an easy benchmark to hit. I also think it's very easy to spend $25,000 on your business. So I would argue that since the business is still going to be taking a loss, that the benefits of the S Corp election are not realized until you get to some surplus income. I firmly believe that most businesses can operate on a strict shoestring budget minus employee and production costs of under $25,000 a year. If you look at softwares, equipment, subscriptions, office supplies, office rental, contractors, things like that, you're almost guaranteed to be under $25,000 unless you're running a multi-million-dollar business. Once you get over $100,000, $150,000 in income, then your expenses begin growing exponentially as you make more money. Unless you've structured and found yourself a business where you can scale and your pricing and profit goes up while your costs are relatively mitigated and a very small percentage. So you have very little overhead, huge profit margin. If you're in a business like that where you've got a large profit margin, you're making a lot of profit on what you're doing already. So if you're making $50,000 and your cost for production is somewhere around like $5,000, very low number, in that case, your expenses will not exponentially increase. However, most businesses, generally speaking, this is very general, so take it for what it is. Most businesses, between labor and materials or costs of goods sold, so whatever it takes for you to make your profit, are right around 65% to 70% on average. With most network marketing companies, your markup is probably going to be around 30%, so you're right in that 70% for cost of goods sold anyways for your product. So you're buying at wholesale, selling at retail. So your retail percentage is about 30% profit markup, generally speaking. So you're right in that ball game. So if you're doing well selling a product or a service, and you've got more than a 30% profit margin, you've got a business that's not going to follow the normal trends as far as expenses increasing as income increases. Now, when you get to about that $50,000, you're going to want to convert to an S corp. Because then you can pay yourself, and you're going to have to pay yourself. So here's the thing that most people don't tell you about an S corp, is that if you have an S corp and you make any kind of profit at all, or you have some kind of profit at all, which most good tax people will make sure that you have no profit unless there's nothing that can be done about it. Java. So anyways, most tax people will make sure that you don't have profit in your business, or that you figure out how to spend it so that you don't. Legally, put you in the best tax situation at the end of the year possible. Now, one thing that most accountants or lawyers won't tell you about creating an S corp is that as the owner of an S corp, you can be an employee of your own company, but the IRS requires you to be an employee of your own business if you're an owner who's active in the business. If you're not active in the business, you don't have to be an employee. But most of us are owner-operators, right? We're in the business, we're in the trenches, we're with our employees 24/7. We don't have a board of directors, we're not sitting back on the sidelines sipping mojitos on the beach somewhere, collecting that residual incomes, none of that, alright? So, we are working in our own businesses, so we have to be paid as an employee. Now, a recommended salary for your position could be anything. The general rule is about 50% of what someone normally would be paid. So if you're the CEO of your company, the average CEO makes between $75,000 and $175,000 a year. I think that's accurate. Don't quote me. You can feel free to fact check me on that, but I have no idea. But we'll just use that as an example. There we go. Examples. I like that. We'll use that. So, when you have that salary, we'll call it, right? So, we'll say it's $75,000 to $150,000, something like that. The IRS recommends 50% of that salary, or tax professionals recommend that you be paid at least 50% of that salary. So, if the salary is $75,000 for someone in your position, half of that would be $35,000, or $37.50 or some crap. Let's figure out what it actually would be. It would be 75,000 divided by 2. Yeah, $37.50. $37,500 would be your annual employee compensation. So your company would give you a W-2 at the end of the year for those wages, and you would pay in taxes and pay Social Security tax and Medicare tax and all that shenanigans, right? So then, at the end of the year, any profit left in the business as an S corp gets passed on to the owner and taxed at the capital gains rate, which is 20 or 21%. I apologize, I don't remember right off the top of my head. So you actually save about 15.3% by taking the money as an owner's draw rather than taking it as income. So, little bit of tax savings for you there as a S corp owner, but if you're not making, if your business is taking a loss, like if you're making 25 grand and your business is taking a loss, then that's a lot of compliance and, you know, paperwork that you just don't have time to. It's stupid. It's not in your best interest to have an S corp if you're only making 25 grand a year. You know, 25 grand is a great side business, but you can figure out how to spend that or reinvest it back in the company. Lickety split. I had a client who 1 year spent over $75,000. $75,000 on meals and entertainment. And what that equated to was dinner with clients. And were meals on the road as he was traveling around and visiting clients and stuff. So, you know, granted, only 50% of that is deductible on taxes, but, you know, you can figure out how to spend money. It's not a problem. And there's tax deductible ways that you can spend the money and reap a benefit from it instead of having to give it to the government. You know, that's one of the things that in my forthcoming book, The IRS's Dirty Little Secret, you're going to get a full impact view on how our tax laws are specifically written to benefit businesses, and how lawmakers over the years on both sides, Republican and Democrat and Independent, have literally spent time screwing the American workforce out of its hard-earned tax dollars. And I think it's coming high time for us to start a revolution and all become entrepreneurs. Reset the clock. Anyways, I just wanted to get that out there. I appreciate y'all for coming into Coffee and Accounting, where we celebrate the small victories. And I just want you to remember, let me just give a quick recap over everything that I diatribed over for the last 35 minutes. Key 1, be a sole proprietor first. Go out and make some money. Try your business out. Key 2, once you start making 15, 20 grand a year on your business, some good chump change, then you can incorporate to an LLC. Not before. There's no point to before. You get some of the same tax benefits as a sole proprietor as you would as an LLC. Biggest difference is asset and personal protection when you're in business. So depending on your industry, it may be beneficial for you to have an LLC straight up front. Point 3, once you get to about 50 plus grand in annual income, then convert to an S corp. Don't do it before. You can always do the late election for the S corp. That's not a problem. So I hope this has been beneficial for you guys. I hope that this has shed some light on that common misconception, and I really look forward to doing some more of these. So thanks. This is Rudy signing off.